Welcome to Accounting High.
Check out the Cashflow show. We discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cashflow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cashflow show. The Cashflow show. Listen and learn. We'll show you how to pay yourself on what your business earns. With Nikole and OKR.
Hey, yo, what up, Niki?
Hello, Scotty. Yes, I've rebranded to Niki.
I remember this brings me back to the day that I rebranded to Scotty. I remember I did it on a podcast episode with you. So guests, students, business owners, listeners, I present to you Nikole Mackenzie.
With 1K.
With 1K, yes. 2 I's, 1K. There's a K in between 2 I's. What's up, Niki?
KI. Yeah, that was per Mike's advice. He said that's cooler with only 1K.
Yeah. Yeah, no, it's cool. It's a good introduction of a little bit of fun into your name that you've had established for how many years now? You've been kind of weaving in and out of these different Nicks, Nikis, Nick. What are some of the other ones?
Well, you call me Nix, but
Yeah,
I've always gone
Nix
by Nikole. And then usually people call me Niki if they've been around me long enough, because my friends call me Niki. So it's kind of like a rite of passage. But there's some change coming soon. So I am, just preparing for that. New stuff coming soon to be announced.
Ooh, we're not going to get any real drops here? What's the...
No, not yet.
All right. So stay tuned, listeners. It's a great topic today. Today we're talking about getting you more money, bringing more money in, getting some money back, free money. R&D tax credits are not just for tech companies, guys. They're for us too.
Yeah, R&D tax credit. A lot of people, don't know about R&D tax credits, and then some business owners might know a little about it or have heard of it, but they assume it's just for technology companies. But that's not true. There are several ways that other types of businesses can qualify for the R&D tax credit. In fact, I have actually taken advantage of the R&D tax credit in the past. Yeah, really excited about this episode because hopefully we can get you guys some money. And also, if you're an advisor to business owners or you're doing their books, there's a lot of opportunity for you to be able to add value to your services by being able to recognize and do the bookkeeping properly and recognize when a business owner might be able to take advantage of that, bring that to their attention, or refer in an expert in order to be able to run those credits for them.
Full disclosure, you did take advantage of it, but it was for a tech or software company that you were developing. Is that right?
It was. There were expenses. We can get into that a little bit later. But yes, I was developing a dashboard software, but I was able to allocate some of the hours that I spent on developing that, and then some of the hard costs, contractor costs that I spent on that. But it doesn't necessarily have to be a software. There are other ways too that we'll get into here.
Yeah, that's what I'm here for it. Let's hear it. Let's hear more ways to get this free money for our service-based businesses out here.
Okay, so let's just go through what is the R&D tax credit.
Yeah, what is it, Nikole? When did it come about?
So the R&D tax credit came about in 1981 with the Economic Recovery Act, and the purpose of it was to act as an economic stimulus that would encourage investment and innovation within the U.S. So it has started in 1981 and it has continued to be renewed. I always thought, oh man, if I could go back in time, I would start an R&D tax credit company because these guys make a ton of money.
Ooh, shout out to our friends out there, Randy Crabtree, and what's the name of it? See, he's got so many different brands, but the firm itself, TriMerit, they do a lot of R&D tax credits. Yeah.
Yeah. And then our friend Miguel at Tax Hack, and Gusto also has some R&D tax capabilities, lots of them out there. But the thing about starting a firm that's based on current regulation is that it can go away. I remember we had At my old CPA firm, there was a guy that specialized in these, like, I forgot what they called, zone credits or something. And I remember they shut him down, so they stopped allowing them. And then the guy was out of business. But I think he may have pivoted to R&D tax credit. So I'm sure he turned out okay.
Yeah, there's always a pivot there. There's always some other thing that's some other problem you can solve there. So the R&D tax credits, they typically work on a percentage, usually the firms that prepare those, or that, so it could be very lucrative because some of these R&D tax credits are pretty big, substantial.
Yeah. So the R&D tax credit, it's a governmental incentive that rewards businesses for investing in innovation and developing new or improved products, processes, or technologies. It allows companies to reduce their bill based on qualifying R&D or research and development expenses such as wages, supplies, and contractor cost.
So it's a lot of the labor associated with specifically that research and development toward a new product line.
Right. So like 90% of the credit is going to be based on wages. You do get a little bit for other qualifying costs, but most of it's coming from wages.
Yeah. So think about that, listeners. Whatever you're paying somebody, a large percentage of that could be right back in your pocket. They're basically paying for you to prepare this new product line, whatever it might be. Do we have any examples of what they're typically used for, or what is some of the more well-known R&D credits?
Yeah, so I'll give you an example, personal example. So we used to have a client that they sold high-end car parts, Porsche parts, and I was on site at their warehouse in person, and I'm walking through, and the CEO is giving me a tour, and then he starts showing me this other business he had that they were developing a new exhaust system that would improve horsepower and torque for the Porsches. And I'm like, are you taking advantage of the R&D tax credit? He's like, no. So I was able to introduce him to somebody to handle that for him. And I think it ended up being like a couple $100,000. They were able to go back and amend some prior tax returns and take some credits. And so he had a full-time guy working on that. So all of his wages qualified, maybe one or two guys, and then a lot of his time spent on it. So that was a pretty good, valuable tour of the office that I did there.
Yeah, but that just shows, the value in what you can bring to just being able to see everything and then the perspective. This is no joke. A lot of these credits are pretty substantial, and all it takes is a little bit of moving some things around on the books to prepare those. And you can go back and amend prior years if you haven't taken advantage of it. Yeah.
So, and as the bookkeeper, if you're going through and sometimes it's hard to tell what a transaction is just by looking at it come through the bank account. So you really have to be having conversations with your clients and being inquisitive and asking what they're working on and making sure that you're not just dumping it all into the same bucket if you think there's an opportunity for it to qualify for the R&D tax credit.
Yeah. So if you're not talking to your accountant and you do have a business, it would probably be wise to start either find an accountant that you can talk to, that you can bring some of these things up to, but also to try and ask more questions to see if you can stimulate some of this conversation. Why haven't I taken the R&D credit? Ask your accountant that. See what they say.
Yeah, good point. So I'll give you a few other examples here. So digital agencies oftentimes qualify for the R&D tax credit. Ooh. So if they're doing like building a proprietary marketing software tool, if they're building a data analytics platform, they've got SEO optimization tools that they're building. Those are all examples. Now, it can't be client work. So like if you're doing SEO optimization for a client, that's billable client work. So they're incurring the economic risk. It has to be something where you're like internally developing some sort of proprietary method, or you're testing certain strategies where you're incurring the economic risk. If it doesn't go right, you're not going to make any money on it. So those are some examples with digital agencies. Architecture firms also are a common type of business that can qualify for an R&D tax credit. So for example, if you're an architecture firm and a client hires you to design a net zero energy building. So that means net zero meaning that the building will produce as much energy as it consumes. So they would have to do a lot of R&D in order to achieve those results.
You're trying to say R&D without saying R&D.
Yeah.
They're trying to do research and development to be able to develop a net zero building. Anything associated with that, any kind of the production that is allocated to that. So that's why it takes knowing that ahead of time too, right? so they can properly account for the time spent on that building that they're working on. So anything associated with that building, they know is eligible for an R&D credit. And so you need to work with somebody that knows these things ahead of time too. This way you can set you up for success when you're claiming the credit.
Yeah, you have to make sure you have all of your records in order. So time tracking, if you've got employees who are working on things that are not R&D related and things that are R&D related, you want to make sure that they're tracking their time so you can explicitly have all your records to hand over to whoever is helping you with the credit. And then if you ever get audited, then you can provide that to the IRS.
You got to have all that substantiated too. Yeah, and it all comes down to people knowing where to track their time spent on these certain things too. That's whenever we've prepared it for clients, it's always, if they have the proper systems in place, it's really easy to be able to track that credit.
Yeah, so we'll give you one more example here, and then we can get into some more meat of it. But manufacturing, food processing, those are all common industries that generally qualify for the R&D tax credit. So usually they're, if you're doing food processing, if somebody comes to you with something new that they want produced, so like a new food product on the market, you might have to build something in order to produce that. So those types of things qualify.
Yeah, I wonder if restaurants qualify. They spend a lot of time. I've been watching The Bear, and they spend a lot of time on R&D and developing new dishes. But I don't think that's a new product, creating a dish. And all the food costs that they have associated with that, I don't think it is. I don't want to throw people for a loop here and say that that's something that would work. But I know that there's a lot of R&D involved for chefs.
Maybe if they're doing like innovative cooking techniques, which I don't know what that would qualify. Maybe a new kitchen process to improve efficiency or food safety.
So what I know of a restaurant bar that developed a new freezer or a new type of freezer, and they got a lot of R&D for what they did with their freezer. And it was like a big substantial chunk of the building that they did with this walk-in, and they did something innovative, and it qualified. Yeah, restaurants, bars, there could be certain things that they do.
Yeah, they may be able to qualify for new unique menu items. I mean, I've been to restaurants where sometimes, especially in Las Vegas, you go to those ones that have the dry ice or flames. If you're creating something new and grandiose, it might qualify.
All right. Yeah, think about that too as you're developing and researching new potential things for your business. So let's talk about how this works. How does the R&D tax credit work, Niki?
How does it work? Well, let's go into discuss the potential credit. So just a reminder that the difference between a credit and deduction, right? Because people get these confused. Credit is dollar for dollar, meaning if you get a $20,000 credit, that's $20,000 back in your pocket versus a $20,000 deduction would reduce, let's say you have a $100,000 tax liability, would reduce it by $20,000.
We call them refundable credits.
Refundable credits. So usually for the R&D tax credit for federal, it can be up to 7 to 10% of qualifying expenses. And then generally for state taxes, it can be anywhere from like 3 to 10%. And most of it comes from qualifying wages. And so typically the way you are taking advantage of those credits is if you have a net income on your tax return, you can take it as a credit on your tax return. Now, if you're in a situation where you're pre-revenue, like a lot of SaaS startup tech companies are, you can also apply the credit to your payroll taxes.
Can I make a note here and tie this in to other topics that we've discussed? So also just note that the time that people are spending in all of this is overhead, general overhead that isn't revenue producing at the moment, right? So you're spending a lot of extra money in your business in order to fund this R&D activity, whatever it might be. And you're not getting a clean return on that. You're not making, like we've talked about the 50-30-20 rule and how much you should be making off of your employees, and all the time that they spend should be tied, or a certain percentage of it should be tied to revenue producing activities. Yeah. These would not be revenue producing activities. So the only revenue that you might be getting out of these activities is the credit itself. So that credit is essentially valuable because you're getting a reimbursement back into some of the out-of-pocket expenses.
Right. And to clarify, it's not actually refundable, but it's money back.
You're getting it back because you've already paid it. And so they're refunding it back to you. They're like, here's a percentage back of what you paid here. And we're giving you a discount basically.
Right.
On what you already paid.
Yeah, what's a good point when you're talking about that. So one thing for our clients, what I see commonly accountants do is they commingle the R&D expenses with other costs and it throws off their margin. So you could look at a business's profit and loss statement and it could look like they're not profitable, but actually they have their normal operating business, which is generating a profit. And then they've got R&D costs where they're building something to generate future profit. So we need to break out those R&D costs and make sure when we're looking at benchmark data or margins that we're not including those costs as part of that analysis. So that's a good point. So anyway, if we can't take advantage of the credit in any particular year, we can carry it forward for up to 20 years for federal. Some states vary on carry forward. In California, we can carry it forward indefinitely. Why wouldn't you just apply it to your payroll taxes? Or maybe if it's more, because you can apply up to $250,000 to your payroll taxes.
But there's other things that, if it's outside of, if you're applying it to your payroll taxes, then you're getting the credit immediately instead of waiting for you to file your tax return at the end of the year. So you're getting a credit back on that. That's why people would file the ERC amended tax returns and then get the credit back right then because it's applied to the tax returns. Yeah. If there's a way to do that, then people probably do that to get it sooner than not waiting for this end of the cycle or the end of the year.
Sure. But I'm saying for the ones that are carried forward, I guess that would be a situation where the R&D tax credit is above what you could apply to payroll taxes. So if you had a startup that didn't have any profit, so they couldn't take advantage of it as a refund, because it's not refundable, right? Mm-hmm. So they can't take advantage of it when they file their tax return, but they could apply it to their payroll taxes.
Yeah, and it's a discount.
So it must be in excess of what they can apply to their payroll taxes.
Yeah, because the credit is being applied against wages, not just payroll taxes. So if the credit is in excess of payroll taxes, then you're going to need to get it in some other way.
It just seems like most of it could be applied to payroll taxes because if it's only 70% of qualifying expenses, payroll taxes are like 7.5%. Anyway, I'm just thinking through that.
Payroll percentage, if it's a percentage of the entire wages, then you're talking about a much larger dollar value and it could exceed what payroll taxes are due at the given time period that they're taken. So then it would continue to roll forward or it would be used in a different way.
Another thing to note here is that, so you used to be able to double dip with this. So you would get the R&D, like whatever you spent on those R&D expenses, you could write off. And then you would also get the tax credit, which is amazing. But a couple of years ago, they stopped allowing, I believe it was a couple of years ago, they stopped allowing the deduction. And now you have to capitalize R&D expenses and amortize them, which was a huge blow to a lot of these tech startups that have a ton of R&D expenses.
Oh, yeah. You could have just written it off. Oh, that's a big deal.
Yeah. Yeah. That's a huge deal. And obviously more accounting work too on our side of having to capitalize and depreciate and all that.
I didn't know that was so recent that they had changed that.
Yeah. Maybe a few years ago now.
Okay, cool. So what are some other real world examples of this? Some other ways to make this applicable? I had a client who was manufacturer of batteries, created batteries for soldiers or people like military, army. They had big military army contracts, multi-million-dollar contracts creating batteries, and they had a lot of R&D. We spent a lot of time just allocating their labor and their costs there. They had a pre-filled spreadsheet that we just kind of went through and, they ticked and tied everything all year. And they just made sure that most of the hours that were being allocated, they made sure that every hour allocated to R&D was accounted for because that was a lot of money. They were getting very large R&D credits and it was just really just tactical. We were just, making sure that we were accounting for all of it. We were preparing the spreadsheet. We handed it over to somebody that prepared the form and it was just all the numbers that we had prepared in a spreadsheet. So it was something that we had to calculate manually, separately. There wasn't any kind of automation for this too. So, but they knew the deal. They knew how it all worked.
Yeah. So let's go into that. So is your team calculating the R&D expense, consulting with your clients, filling out the tax forms? Or are you using a third party partner?
Yeah, we're not preparing any of those. Yeah. We don't specialize in that. We've just had clients that have qualified and that we've that have already been partnered with somebody that does that.
Okay, so if a business owner wants to see if they qualify for the R&D tax credit, most R&D tax credit firms will do a free assessment for you.
Mm-hmm.
And then let's get into how much it costs, because
Sure,
it can be expensive, but you're also getting a lot of money back. So R&D tax firms aren't technically allowed to charge you based on contingency fees. So what they've done as a workaround is a lot of them will say it's a flat fee or a fixed fee, but they can pretty much, when they're doing the initial assessment with you, free assessment, they get some of the preliminary information so they can figure out roughly how much of a credit you're probably going to get. And so usually it ends up, I mean, it varies on firm, but what we've seen is around 20% of whatever the potential credit is what some of these firms charge.
Between 10 to 20. We've
10
seen.
to 20. Yeah.
So usually what they're doing is they're figuring out the credit and then doing a fixed fee of whatever 20% is of that credit. And that's straight up, you're getting 80% of that, but they're taking 20% off the top.
Right. But you're getting 80% of it.
Yeah, exactly. And so I've had seen people try to do it themselves too. I've seen people try to prepare all that stuff themselves just to save the money. People did it with ERC for sure, or tried to, with very little success. But, well, I don't know what the long-term success is, but we have seen people go and they didn't want to pay it, so they went off and tried to prepare it themselves.
Yeah, there's some online ones now that make it really easy to get it. Like when I did mine, I went through a service called Main Street, so the fee was much less, and I just went through and answered some questions, and then it's like generated the tax form for me, and then I gave it to my tax accountant. Now, I have had some tax accountants tell me that they do it for their clients. They just charge it as an additional fee to do the calculation. So I would say start by asking your tax accountant first, to having that conversation, and then they can let
before
you know.
You go to a firm that's going to take 20% of it. You might be able to figure out a way to not really DIY it, but figure it out, and your accountant may not charge that much. I know we weren't ever charging 20%. If we ever did something like that, we didn't think you could charge a contingency fee, so we just charged a regular fee.
Yeah. Or they might say, hey, you know what, this is too complex. I have a partner that I work with, and refer you to the partner.
Sure.
Not devaluing the R&D tax credit folks, professionals out there, because some of these things
I'm sure they can back up their work. That's the other thing too. Is if you're doing it by yourself, these places like Main Street are not going to back you up if you get audited. But if you won't go to one of these companies that do it, they are keeping all that documentation. You're paying for what you get too, right?
Yeah, 100%.
Do it yourself, and you're screwed if you've overclaimed a credit, and then a few years later you come back, you have to pay it plus penalties and interest. Then you're going to go find that accountant that needs to help you represent you before the IRS too. So,
yeah, some of these companies also offer like unlimited audit support in case you get audited as an additional fee.
For sure. We do it with our clients. Anything that we prepare, we give them audit support. They pay for that, but then later if they need it, it's easy. Cool. Any other cool little tips or tidbits about the R&D tax credit?
I mean, I think ultimately you and I know enough about the R&D to be able to at least get people's interest piqued. We're by no means R&D credit experts, but we have seen it come about. We've had individual experience with it. And so our suggestion really here is talk to your tax accountant about some opportunities, be aware of them. And if you're advising business owners, be looking for opportunities to make that recommendation for your clients.
Yeah. And if you are looking for a tax accountant, you can go to PadgettNC.com, figure out how to contact us there. We have fill-in forms and stuff, but we could help out with stuff like that.
Cool. Yeah. And if you need accounting support, bookkeeping, controller, CFO level support, AP, AR, payroll, all that good stuff, momentumaccounting.com, or follow me on LinkedIn, Niki, Niki Mackenzie.
Niki on LinkedIn now. Yeah. And I'm Scotty on LinkedIn too. And give us a little subscribe and review and some nice things on socials maybe about the show. If you're listening, if you're getting something out of it, share it with your friends. Yeah, that's why we keep doing it. Help you guys out.
All right, Scotty. Well, it's good to see you this week. I'll see you next week.
Peace out, homies.
Goodbye.
Yeah. So you're drowning in cash flow issues. You run a business, but feel like it's running you. Customers won't pay, but you got bills due. It appears you won't have enough for payroll coming up soon. It seems like you're running nowhere fast. You work hard, but never able to withdraw cash from the business. You get more customers, hire more employees, but still take home hardly anything. You feel like you're on a hamster wheel, frustrated cause the battle's always uphill. Even though you got a bookkeeper on your team, they send you reports, but you don't really know what they mean. Your CPA doesn't understand a thing about your business, at least that's how it seems. But if you want to get above water and grow, check out the Cashflow Show. This is the Cashflow Show, where we help the small business gain momentum and become profitable. This is the Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cashflow Show. Discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cashflow Show. The Cashflow Show, where we help the small business gain momentum and become profitable. This is the Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cashflow Show. Our advice will take you far. Cashflow Show. Tune in with Nikole and